Yer, holla at your boy. Welcome back. It's your boy Orlando, aka King Smitty. Um, and we're here to see what's going on with the portfolio. Give an update. It's July 4th. Happy 4th of July to everybody. But before we get into this video, please hit that like and subscribe button. I really appreciate y'all. We're trying to make our way to 100 subscribers, everybody. It's a journey. I know I've been away for a little minute, but I've been handling so many things with the house and everything. But I'm going to give you an update, and I'm going to let you know, is it time to get out the market? We'll see. Everything's been crashed, so we'll see if it's time to get out the market. But first, year to date, my portfolio is down 9.5%. In comparison to the S&P 500, which is down roughly 20% this year. Right? And to this video, I really just want to let you all know each stock, each stock that I'm holding, and how it's done year to date, roughly. Right? So show my whole portfolio in a sense, because it's not like it's a test. You feel me? It's not like I'm not going to show you my answers because I don't want you to pick the same stocks I pick. I mean, pick them. Shoot, let's get it up. Let's run it up together, right? But before we get started, is it time to get out the market? No, I don't believe so. If anything, this is where I am truly starting to dollar cost average. I haven't been dollar cost averaging just yet because one, I've been holding off for one stock, take it a little bit cheaper so I can buy in heavy or start to fill out my position. I'll talk about that at the end of the video, so make sure you stick around for that final stock I'm about to start loading up on. But I haven't really been dollar cost averaging yet because I've been saving up for that one stock, and then as well is I've been seeing the market just drop, consistent drop. And now that we have a bounce here, I don't think this is a full turnaround just yet. But once it starts to drop again, at that point, then I will start lowering my price. Cause I didn't want to start dollar cost averaging just yet, and then I'm just slowly chipping away at my price target. Just slowly chipping away. No, I want to be able to, when I start dollar cost averaging, these prices drop. I mean, it's getting slashed in like almost half because these stocks is getting hammered this year, right? But let's take a look at everything I'm holding. Three things that you won't see is my cryptocurrency, right? So I'm going to tell you my cryptocurrency off the rip, so there's no confusion with it. And that is Dogecoin. Year to date, down roughly 61.5%. Shiba Inu, roughly down 50%. Yeah, roughly down like 50-60%. Ethereum, down 71.43%, right? And so now, let's get into my portfolios. So the first stock I want to talk about is UWM Holdings Corporation. This is a free stock I was given by Webull. And they handle mortgages for like individuals and residential homes. They handle the distribution of mortgages, and you can see year to date. I haven't had this the full year, so I am up on this stock. But you can see year to date it's roughly down 39.4% year to date. Stock market's down 20% year to date. So when we going through these numbers, remember, the stock market's down 20%, and this stock alone was down, what was it again? 40%, roughly 40%. So you see it's down double the S&P 500, but I came in roughly around, I'd say right here. So I'm probably up 2% roughly. Next stock I want to talk about. Like I said, I'm not going into like heavy detail with these stocks. I'm just showing you what I'm holding, how it's done year to date, And maybe I'll give a plan on this one, on these stocks. I'm like what I plan on doing with them. With this one, I plan on selling this and putting those proceeds to my next stock that I'm about to show you all. And that next stock is, boom, Nvidia Corporation. Stock is a giant in the chip maker. If you don't know what the chip maker's for, you know everybody needs chips. Video games, consoles need chips. Cars need chips. Your tablets need chips. These little chips is going to be the future of a lot of technological advances. Even though the market has been getting crushed, you can see year to date it's down roughly 51%. S&P is 20% down. So these stocks are getting crushed. I had recently, I didn't have a position in the video. I recently started loading my position, dollar cost averaging in this position because it was just so low. In comparison, you see at $300, I started dollar cost averaging at 170 roughly, right? And then it continues to drop down. So now I'm comfortable at this point, slowly loading my position up on Nvidia. So that is going to be definitely one of my long hold runs. And all these are beating the S&P 500 down. So the S&P 500 is at 20%. These are over 40% losses year to date. Same time period. NEO. I have been loading up on NEO, but I kind of slowed down a little bit because I've been putting money towards Nvidia and a couple other stocks I'll mention in the future in a couple of slides. But NEO, Chinese tech company, I'm a Chinese EV maker, electric vehicle maker. China has been getting hit with those COVID lockdowns. There's that war going on with Russia and Ukraine. There's the sanctions. So much stuff going on. I know they're supposed to be giving a credit for those who, I believe, buy an electric vehicle next year. They're extending it. So stuff like that will help this stock in the future. All this bad news that the market has been going through this year, hopefully it'll be able to reverse it next year. With all the news that's coming out, giving people credits for buying electric vehicles and stuff like that. China no longer being affected by the zero COVID policy. The numbers are starting to really go down. So we can hopefully see this stock turn around. You can see year to date, this stock is down 36%. At one point, it was down 60%. And now it's down 36%. So if you could have bought this from the low to now, you'll be up 63% in that short period of time. But unfortunately, I've been dollar cost averaging. I haven't been loading up. And I think my dollar cost average, I think I'm at $28 right now for NEO. But I will continue to load up because NEO is going to be a banger in the next 5 years. China has one of the biggest markets for vehicles, and once they unleash NEO, and I think NEO is supposed to be expanding as well to the United States in the next couple of years, which will also help their numbers for the deliveries and stuff, which will bring in a lot of revenue. Next stock we're going to look at is GNW, that is Genworth Financial. I do believe they handle mortgages as well. This is another free stock I got from Webull. So I'm not too in depth with this stock. You can see it's all over the place year to date. Year to date is down 11%. It's really not that bad. I think I'm up on this play like 2%. So with this one, I probably will end up selling this one in order to start positions in new plays, or either to load up on Nvidia or something like that. Because I'm not really into the mortgage stocks like that, especially with this crash coming through and housing market is supposed to get reset. So I'm definitely not trying to hold these stocks long term right now. Get my cash, get out. Right? Next stock I got is Bio Nano Genomics. And I got this play off of Kathy Woods. I looked up the company. They have their little Sapphire device, which is helping genome editing and genome sequencing to see exactly what's going on in your genomes for these diseases, so that way we can find cures and better remedies and everything for the people. It's also helping with in the hospitals a lot. I mean, it's not too profitable right now, but I can definitely see this in like 2030 or 2025 even taking off. Once this market turns around and they start getting their product out there to more doctors' offices, more hospitals, more private practices like that, I can see this company starting to make revenue a lot, or they even get bought out by somebody else. But they have been doing a lot of partnerships. So year to date, this stock is down roughly 58%. Right? S&P 500 is down 20%. You see, the stock is only roughly $1.34. I think my average cost is like $3 or something, or like high $2. I can easily bring that down. Next stock, ADT. This was given to me by Webull a long time ago. Only reason I didn't get rid of it is because, one, I use their services, so might as well invest in what you're using. And they give a little dividend back, just a little something. I think like 3 cents every 3 months. So I'm not too much worried about holding ADT. Really, once ADT gets above like $8, I'll probably cut it loose, sell it for a profit. You can see ADT's down 25%. That's really the best stock / cryptocurrency that we've looked at so far, ADT. As far as the loss, most stocks have been down 40%, 50%, 60%. The S&P 500 is down 20%. This is down 25%. So you can see this one is a little bit more closely tied to the S&P 500 when it comes to like the swings for it. The S&P 500 goes up 2%. This stock might go up 1.8%. So it's kind of closely tied to the S&P 500. You can see year to date. Next stock, Apple. Apple is a banger, probably the biggest stock in the stock market right now. Do I own a lot? No. If it continues to drop down, once I said I have a stock at the end of the video that I'm about to start loading up on. Once I put all my buy orders for that stock, which will be announced at the end of the video, so make sure you like and subscribe and you're sticking around to see it. Once I have that taken care of, then I will be buying more Apple stocks. Apple's the big dog in the phone industry, in the tablet industry. They have a car coming out that they're working on. I forgot if the release date was 2025 or what, but they have a prototype or design that they're trying to get through. And it's going to be an EV, electric vehicle, because at this point of the game, just becoming an automaker isn't enough. After what Tesla has been doing, and then now that Neo's in the game, and Rivian, and Li Auto, all these. Now if you're getting in the game, you got to be electric vehicle, because the world is trying to be more efficient and a lot greener. So that's why you got the Mustang, electric Mustangs coming out, the electric Hummers coming out. Each automaker has an electric vehicle coming out because that's the new wave coming. So Apple has this electric vehicle trying to come out, and you can see Apple year to date is down 23%. Another stock like ADT that's kind of closely intertwined with the S&P 500. So the stocks that has been getting hammered, most of these are my growth stocks. So I'm 100% comfortable with those getting hammered, because once the market turns around, those will be flying like Superman. I guarantee that. So we all know about Apple. This one is closely tied to the S&P 500. I believe this is in, like, if you have a retirement fund, if you have like a major, like a ETF for the market, you more than likely have Apple in one way or another, right? Whether you're Team Apple or Team Android. I'm getting the Apple stock. Next stock, Digital Turbine. Stock has been getting hammered. You see year to date, this stock is down 72%. If this stock hits 15 or lower, I will place a huge order in and hold this until 2030. This stock is the you when you buy a phone, you see that you have apps on there already, and you didn't download them, but they're already on there. But all you have to do is tap it, and it'll download to the phone and finish downloading. That's Digital Turbine, and it's helping a lot of the companies get their products out there for the one-tap download and stuff like that. It's really helpful with the advertisement space, which is huge. I think I already looked at this stock, but like I said, it's down 72% roughly. I love this stock. I mean, you can see the stock market is coming down. I am in a lot of growth plays, so these are going to get hit a lot harder. So I'm not too much tripping about it, but I am going to load up if it hits under 15, and if it goes below 10, I am going to load the boat. No lie. I like Digital Turbine. Next stock we're going to talk about is ChargePoint. If you go to ChargePoint year to date, ChargePoint is down roughly 36%. Now, I'm not 100% sure, but I do believe that's a little bit closer towards the Dow. I believe year to date, no, that's closer to the NASDAQ. Year to date, I think the NASDAQ is down roughly 30%. ChargePoint is going to be one of those stocks that you want to get in now. So 2030, 2035, you chilling. Right? Because these are the electric charging stations for electric vehicles. Tesla, Neo, Rivian, Lee, the Hummer, all that stuff I was just naming before. They're going to need somewhere to charge at. ChargePoint has the biggest percentage of that sector, of the charging sector. They have the biggest percentage. They are the leader. If you want to get into a market, you always want to buy the leader. You don't want to buy the laggards, because the leader is the leader for a reason. So you always want to get into the top dog. You don't want to go into some other stock that's not doing as well. If you're getting trained to run, and the fastest guy in the state of Florida says, "Hey, I can train you," you will go to that trainer rather than going to, your Uncle Ted who ran track in high school. I mean, we love you, Uncle Ted, but you're not faster than the fastest guy in the state of Florida. So I'm going to go with him and let him train me up and let me get to where I want to be at. In this sector, ChargePoint is the fastest guy in Florida, right? So we're on ChargePoint, and we're waiting for, because I know Biden says he wants over 250,000 charging stations in America, right? As long as the demand for electric vehicles go up, ChargePoint, you'll see more charging stations at malls, gas stations. Maybe eventually you'll probably see a charging gas station where you got like 8 pumps at the gas station. You probably have like 16 charging stations all in one. Eventually, that's in the future though. I don't see them yet, but that's probably where they're heading to. But of course, all this is not financial advice. It's just literally entertainment purposes and my portfolio and what I'm doing. My next stuff we're talking about, boom, Tesla. And I'm sorry about the rocking a little bit, just a habit, but I am gonna work on it. I promise y'all. Tesla is down roughly 43%, closer towards the NASDAQ. It's still beating it down a little bit. NASDAQ here, Tesla's down here. But the thing about Tesla is once this market turns around, Tesla might be one of the first things up. Like maybe the first, but it'll be one of the first things to probably go up. The electric vehicle market. Tesla doesn't even consider themselves an auto company. They consider themselves a technology company that has a car. And because of them, they are the leader in the electric vehicle industry. You see more automakers going and trying to buy technology companies to intertwine them or integrate them into their vehicles just to catch up with Tesla. But you see how that going so far. And you can see down here, you got the Li Auto, Lucid, Rivian, the other electric vehicle the makers. And as you can see, the last day of trading day, Tesla's up 1.24%. Li down 1.59. Lucid down 0.93. Rivian down 0.16. Because they are not the leaders. They're not making money yet. They're on their way up. Will they be big in the future? I don't know. If they do, there's money to be made there. I'm not going to lie to y'all. They're not the leader, but there's still money to be made there. Next stock we're going to talk about is Intera Bio. Let me go to the year-to-date chart. This is the company this is a biotechnology company. They're working on improving medicine in a sense. They have an osteoporosis pill that they're trying to do. Instead of having to go through the shot wave for osteoporosis, they're trying to do it through a pill form. And they have another patent for another kind of medicine. I'm so sorry, y'all. I forgot. But I'm holding this because this is supposed to go to roughly $8. And you can see year to date is down 57%. Even in a bear market, a bio play can run up. It can explode, honestly. So I'm holding them at least until $3. And then I put a stop loss on so I don't go back underneath there and just let it keep going up. And if it comes back down, I'm out. But Intera Bio, I'm not really following that too much. I'm just letting that one sit in my portfolio for at least a year, just so I don't get hit with those extra taxes like that, even though I'm at a loss right now. But I'm just letting those shares sit there. I'm not loading up. I probably add a little bit more shares to Intera Bio, but I'm not fully invested, shall I say, into Intera Bio. To be like, I gotta keep loading up. It's cheap right now. Load. I'm not like that with Intera Bio right now. Next stock, here in Florida, down in Orlando, that's my name, Disney. Ticker symbol DIS. Had a thing going on with Ron DeSantis recently. You can see they're down 38.5% year to date, right? And Disney has, and this is just, you can see that's close to the NASDAQ, first of all. But you can see that's all due to, like, the market being down. Disney didn't stop making movies. Disney Channel didn't shut down. ESPN still owned by Disney. Disney now has their theme parks open up full time, at least here in America. I think they just opened up another one overseas. They reopened that one. I'm not sure about the cruise lines. So if the cruise lines, we're going to assume that they're not up right now. I have no idea. But let's just say they're not up fully. Well, actually, they might. I just saw a 60-person fight on another cruise. So they could be up. Let's just say they're partially up. The Disney cruises. What else? Disney still got Disney Plus, a streaming service. They're still making movies like Marvel, Star Wars, everything like that. So Disney hasn't changed. Disney is still Disney. So it's going down, the market's going down. The market's going down, Disney's going to go down. It's simple as that. It's going to beat the market, though, because it is still kind of a growth play, in a sense. So you're going to see Disney come down a little bit more. But I'm not worried about Disney. Honestly, Disney is at $96. If Disney hits $75, if Disney hits $85, I'll say, I'll put in a nice little buy order for Disney. A nice little buy order. Next stock. This is Virgin Galactic. Year to date, down 53%. At one point, this stock got down to $5. So from its low to now, it's up 12%. This stock, I love it. I love space exploration, space tourism. The idea, and the thought of it. I love it. So I'm loading up on this. Oh gosh, if it goes down to 6 again, that's another 100% drop from. Oh no, I'm sorry, it's at $6 right now. So if it drops down to $5, that'll be. Let me see. Let's start right here. So that'll be a drop roughly around 20. We'll say like 18, 17%. If it drops back down to the fives, I will load up. Load up. They haven't started their tourism just yet. It's supposed to start at quarter 4, or maybe between quarter 4 this year and quarter 2 next year. They should be starting their commercial flights for everyday people. By everyday people, I mean people who have millions of dollars who can afford to fly this flight, right? And once that starts happening, revenue should start to come in. And Virgin Galactic should, on their test flights, they were hitting $60 highs. It was a bull market, though. Don't get it mistaken. It was a bull market. So hopefully, once the commercial flights start, hopefully we're in a bounce, like a huge bounce. If we're not cleared of all this mess right now in the market, because as you can see, we're on all of our stocks on a downtrend. If S&P 500 can hit a bounce, not a dead cat bounce where it just bounces and come right back down, but like a bounce, we go to test new highs before the possible recession, if we're not already in one, comes. If those fights happen in that window, this could hit 60 again, easily. And that's at least 12 times its price right now. So that'll be a nice little payday. If it does that, I'll definitely be cashing out on most of my stuff and let it drop back down, and I hit back in around $7 roughly. Cause I like Richard Branson and what he's been doing. I like I said, the space exploration, the space tourism sector. Them, Blue Orbit, and Elon Musk is SpaceX. I love all of them. So if one does good, they all kind of do good. There's no necessarily leader just yet. I mean, I guess you want to say a leader, it would be maybe SpaceX, because they've done it multiple times, go out into space and came back successfully. Blue Orbit has been taking people. I mean, they all been out Earth space or out of the Earth's orbit, gravitational pull. So that way they've been zero gravity. They're doing a floating thing. But in the future, I can see this thing going big. They're supposed to be linking up with like NASA, do little side quests for them and stuff like that. So we'll see how it goes in the next 10 years. I'm praying for good news. The stock I've been loading up on, Amazon. So that GNW and that other stock I said they gave me for free, I'm going to sell those, and I'm going to put those in the NVIDIA and Amazon. Right? Year to date, Amazon is down 35%, close to the NASDAQ. Right? It's a little more beat down than the S&P 500, but it is close to the NASDAQ. And I love Amazon. Amazon hasn't changed a lick. All that growth from the pandemic is starting to get some of it back now. Pandemic is starting to calm down a little bit. It's still active. It's still alive, but it's not as rough. It's not as bad as it once was. So people aren't ordering. I mean, I'm sure people still order Amazon at an all-time high, but everybody isn't home no more. When everybody was home, everybody was ordering from Amazon. Now people can go to stores and stuff like that. So it's still a beast, but it's just giving back some of the profits. Let's look from like a year, 3 years. And you can see the pandemic was at 104 to $106 was the peak before, and then it dropped to $104. That's the pandemic, right? roughly. Yeah, that's roughly the pandemic. You can see right now it's at 109. $5 more, it's going to be at the point where it was before the pandemic started. And then once that pandemic, you can see it got down to, that's 2003. It got down to roughly $93. So I got me a buy order for Amazon at 93. I mean 95. I got one at 90, and I got another one at $80. I'm ready because $80 over here, you can see $80 was something serious back in 2019, right? So I got those buy orders for Amazon, Amazon Prime. People still watching TV on there, so I have no issue with waiting on Amazon to drop to the price I wanted rather than buying it at 109, losing like $20, average down, and then hopefully the market go up. I just wait for it to come down a little bit, put my buy orders in, and let them meet my buy orders instead of me chasing these stocks. Right. Next stop, Planet 13 Holdings, the marijuana company that is coming to Florida. You can see year to date is down 60%. If this stock is at $1.20 right now, if this stock hits $1, I will make a huge, a huge order at $1. And if it drops down to 50 cents, I will make an even bigger order. I'm going to make this play my biggest position, size unit wise, quantity wise. It's the cheapest one, I believe, out of all of my stocks outside of cryptocurrency. This is one that I do believe in. I've been to the store in Vegas. I like what they're doing. They're bringing 2 stores to Florida. I think one in Ocala, one in Orange Park. I'm sure they're going to have one in Miami eventually, Orlando, Chicago. They're expanding and have so many plans for the entire nation that getting in now is just, seeing this at $1 is mind-blowing. At one point, it was at $7. You can see the high is $7.11. So I'm definitely looking forward to this stock. Now let's get to the 2 honorable mentions. I do not have these next 2 stocks. Do not. But we're going to take a look at them. Right? So the first one is going to be $GOOGL. Google. Let's look at Google stock. Right? Year to date, you can see Google. Year to date, Google is down 24%, real close to the S&P 500, right? I have a buy order because Google is splitting. It split on Monday, on Friday. It was supposed to split, I believe. So when we come back trading on Tuesday, this should be a little bit over $100, right? They're doing a 20 for 1 stock split. So if you do 2174.75 divided by 20, each stock would be $108. I'm gonna start dollar cost averaging in this play at $100. I know this is gonna be a long term play, and I might not ever sell Google, but every dollar count. I'm trying to get all of it. I ain't trying to leave a dollar on the table. I need all of it. So I'm put my first order at $100. Second order is gonna be at $90. Third order is gonna be at $80. Low in the boat. Next stock I want to talk about, and this is the last one that I'm looking at, is going to be SoFi. Not Santex. I'm sorry, y'all. I thought I put SoFi. SoFi, part of the NASDAQ. Year to date, you can see SoFi Technologies is getting hammered. SoFi is down 65%. The thing about SoFi, and the reason I like SoFi is because in the future, SoFi is going to be a big bank. It's just now starting off in the stock market. It's just now getting like becoming an actual bank instead of just being online. So SoFi is coming along. I previously bought SoFi around May 10th for $5. And I sold it for $7.27 already. So I already made like, yeah, I'd say about a 35% gain on my SoFi shares, and I sold it. And I took everything I had in that stock initially, plus that 35% gain I got, and I'm putting it all back into SoFi. So I have my buy orders at $5 again, and I have another one at $4.50. Right? You can see it can't break the 50-day moving average. So as long as it bounces on that again and comes back down, we should hit $5, no issue. Once we do, I'm gonna pick up my shares. If it goes down again, $4.50, pick up some more shares, and then I'm gonna ride this to the long haul. I might hold this one till it hits $16 again. If it's $4.50, that's almost a 4 times share of return. 4 times growth potential. You feel me? So this is my portfolio. I really don't feel like it's time to sell. I think it's time to finally start dollar cost averaging in. And I have so many plays in different portfolios. That's why I'm starting early, because I don't want to start when I think we're at the bottom. Because if I start when I think we're at the bottom, then at that point, it's turning around. It might not, shoot straight up like a check mark, but at that point, it's coming right back up, slowly but surely. Now, the stock was at 80. I could have bought at 80 because I was waiting for the bottom. Now it's at 85. I won't get 80 again because it might not come back to 80. Now it's at 90. Now I can't get 85 again because it's back at 90. But I've been buying, because at the bottom now, I'm buying these other stocks I want to buy into. I don't have the money to buy Google, Amazon, these other stocks. So if I start dollar cost and averaging now, once we hit the bottom, I've been dollar cost averaging on this second half of this decline. So that's my plan. I still don't have, I remember the beginning of this year, I said I'm going to work on my dividend plays. I still have not started my dividend plays as of yet. Well, everything getting hammered like this, I've just been so excited to freaking save up for Google, SoFi, bring my averages down on certain plays. Like certain plays, I did bring my dollar cost average down in, like Digital Turbine. I'm not gonna lie, I bought a few shares of those. I didn't load up yet. Biogenomics, I bought a few shares. Neo, I bought a few shares. But I'm not loading up just yet. I'm waiting for it to get a little bit lower. And then I'm gonna put huge buy orders in. Bring all my dollar cost averages down. And as you can see, the stock market is down. I mean, S&P 500 down 20%. Most of my portfolio is down like 50, 40, 60. That's wild. But once the market is a bull market again, and the S&P 500 is only up 12 to 15%, you can see my portfolio up. Each one of my stocks up 40%, 60%, 70%, 100%. And that's why I'm cool with these losses. My portfolio is still, with all these stocks being hammered down, my portfolio is still up above the S&P 500. So just imagine when it turns around, if I can stay above that S&P 500, you see at one point my portfolio was up 20%, S&P 500 was still in the negatives. That's how my portfolio is going to be once this market turns around. And once this market turns around, stop losses. Once my plays get into the positive, they won't get negative again. I guarantee that. I'm getting better every day. I'm learning. This is the first true bear market I've been into. So the next bear market, I'm prepared. So you can't just make mistakes and then, like, dang, oh well. And then the next time it comes, you fall for the same mistake. No, you gotta learn. You gotta make changes. If you just getting beat upside the head and you just smiling about it, there's something wrong. You're not gonna win this fight. But you see somebody swinging at you, you remember you got hit the head last time. You put that hand up and block. Okay, now you can find something else to do. You can find more ways to attack, and we're gonna attack this market any way we can. We're gonna face it head on. I am not no financial advisor. I'm not a professional trader. I'm just a black brother who's trying to get his family and friends to invest in the market and to enjoy my stock journey. You feel me? That's me, your boy King Smitty. Make sure you like and subscribe and leave me a comment about how your portfolio is doing compared to the S&P 500, how your portfolio is doing to the NASDAQ, how your portfolio is doing to Dow Jones, Russell 5,000, whatever. Just let me know how your portfolio is doing year to date. Is negative? So how much? Is it worse than mine? I'm down 9.5%, and we're at July. First 6 months out the way, I'm down 9.5%. What about y'all?